TSLY's had its ups and downs since inception, but mostly downs. After the reverse split, I wondered if it was time to drop this ETF completely. This video is not financial advice, nor is it a recommendation. Please do your own due diligence before investing into anything. TSLY sounded promising at first glance, an ETF that brings in dividends regardless how Tesla stock moves. While Tesla was going up or sideways, TSLY did fine. But if Tesla goes down, TSLY suffers, and Tesla goes down often. Earlier this year, the share price went down so much, YieldMax did a 2-for-1 reverse split. On the surface, the merger itself did not directly affect my total remaining capital. Unfortunately, TSLY did not stop dropping until the recent gap up in Tesla shares. When it came time for the next monthly dividend, the payout was not twice what it was per share prior to the reverse split, meaning the dividend yield across my entire position was also decreased. For an extra kick in the teeth, I compared the total returns of TSLY to just holding that same dollar amount of Tesla shares. Much to my chagrin, if I had bought both tickers the same day TSLY started trading, I would have lost less money just holding Tesla shares. At that point, I was convinced this ETF is not worth buying and holding forever, so I tried to figure out what the proper use for this ETF is if there is one at all. Looking back at the daily chart, I'm sure if you bought in at one of its lows and sold around the next high, you'd make some dividends and capital gains, but that strategy has some issues of its own. First, every dividend payout is a taxable event, meaning you'd owe taxes for each payout even if you still lose money selling shares for a loss. Second, swing trading like this requires a level of time and attention that just isn't worth it if my objective is passive income. If I have to put in that kind of time, I may as well just trade my own options or swing trade something without an expense ratio. That brings me to my next option, swing trading Tesla shares directly. Tesla stock has bounces that move enough to consider trying to buy in at a low and selling as close to the next high as possible. It's risky, but as we've seen, so is holding TSLY. If you want something easier than swing trading, another option is flipping puts on Tesla. If you missed a bottom for Tesla and shares are going through the roof, you could try buying a put contract around the top. When the next drop comes and those puts go in the money, you can sell that put for a profit. You don't even need to own the actual Tesla shares to buy and sell puts because it's its own asset. You only need to own shares in order to exercise a put contract. You could even blend these strategies together if your position is large enough. You could buy direct shares around the bottom and use puts as a hedge in case the stock crashes unexpectedly. Is TSLY a lost cause? Let me know in the comments below. If you like this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.